Japan, Japan, Japan. It's now or never for you. Why? Japan seems to be the big surprise that everyone is waiting for. This is crazy. Nickily, this has nothing to do with the US markets today. Guys, it didn't really change the stock markets right now. In fact, I think it dumped in a bit in the morning and then pumped right away. Okay, so the stock market isn't really worried about this. I think cryptos are more worried about it because cryptos have been falling steeply. But today, guys, we're going to talk about the carry trade. Plus, the fact that no one is paying attention is kind of scary. But we will because the Ridders told us to. Why? Guys, this is the Japanese stock market and it's been going down. Okay, it's so far minus 2-something% here, guys, that it ditched. Why? Okay, why did their stock market drop, guys? Because people are afraid that this trade will end. As the Bank of Japan announces its plan to close down $250 billion worth of ETFs, stocks drop, yes? It might not seem like much, but guys, it makes a big difference. This is what we're going to talk about in this video. The yen carry trade is back, according to Ted Pillows. What does this mean? It might be even worse than the crash in August 2024. Now, guys, let's talk about August 2024 before we talk about the Japanese 2-year. Remember? Let's quickly talk about Bitcoin. August of the year 2024. This red candle was lit in August 2024. I remember this, guys. Okay, I remember that. The markets were scared. A lot of people lost money. Bitcoin lost about 21% and XRP lost about 34%. Okay, so that's what people are worried about right now because of what might happen. Everything goes back to Japan. Now, the Bank of Japan said today that it will begin selling $520 billion worth of ETFs it owns. The Nikkei 225 and other Japanese stock indices fell right away, right? That's why their stock market was going down, but that's not the whole story. Low-cost yen has been used by investors for decades to buy stocks, cryptos, and other assets. A rate hike by the Bank of Japan is now planned for October because of the risk of inflation. That's why then. Guys, if rates go up, investors will sell their global assets and turn the money into yen to pay off their debt. This will cause a lot of short-term selling pressure, like in August 2024. I read that the size of the yen carry trade is about 14 trillion yen, which is 3.5 times the size of the crypto market. Pay attention to this. Okay, so something similar took place in August 2004, guys. Hedge funds and other institutions borrow yen from Japanese banks. This is what the carry trade is all about. Okay, guys, let's talk about the Japanese yen. Okay, at very low interest rates, maybe even zero or even negative at times. Okay, but I believe it is now at what, 50 basis points. Guys, it's no longer zero interest rates. Even though it's a little higher, Japan's interest rates are still much lower than those in the US. So these institutions and hedge funds go over there, borrow cheap cash, turn it into USD, and then buy crypto stocks and other assets to keep the price up. This is another way that the markets have been kept up no matter what the situation is. Now, the problem is that if the Bank of Japan raises interest rates, those rates will go up, which is bad because they will have to sell all of their assets to pay back the loans that hedge funds and institutions borrowed from the Bank of Japan or these Japanese banks at low interest rates. This is how I understand it, and it leads to market dumps and reverse carry trades. Watch this to quickly hear you talk about the reverse carry trade. There have been very low interest rates at the Bank of Japan for the past 20 years, sometimes even zero or negative, even though it seems crazy they would pay you to borrow money. But when you're in stagflation and need your economy to grow, you do pretty much anything to get people to borrow money and spend it in your economy. So my question is whether they use Japan as a puppet for the rest of the world. Let's say it's for the markets. That's interesting. The Bank of Japan let a lot of big pension funds, hedge funds, and other large groups with good credit borrow yen. They then exchanged it for dollars or any other currency they wanted and used it in global markets around the world. They got free money that they could then either earn 4%, 5%, 6%, 10%, or 20% on, depending on their plan and where they put the money. And since interest rates in Japan have kept going up, a lot of those notes need to be refinanced. As the market has changed and currency rates and exchange rates have changed, some trades that made sense when interest rates were low are starting to not make sense anymore. This is because the interest on those loans has gone up a lot. That means that all markets will have to call for credit and there will be a liquidity crisis. Don't get caught with your pants down, you know? I hope you guys aren't taking on too much debt and that you're putting your money in the right places. That's interesting. So, I don't know if the Bank of Japan will raise interest rates here, right? So this is what it says. This is because the Bank of Japan might want to raise interest rates in October. So guys, this might happen in October. What happens when the carry trade goes wrong is that it could go wrong, right? Suppose the value of the yen suddenly goes up because interest rates are going up. This would make it more expensive to pay back the loan, right? So people are going to sell their crypto stocks out of fear, right? coins and stocks in the US to try to pay back the loan. Guys, this could be the black swan because a lot of people are talking about it. And the crash we just talked about happened in August 2024, right? It was a surprise when the Bank of Japan raised rates from almost 0 to 0.25%. It came as a surprise that rates went up. Okay, then the yen went up, which caused their stock market, the Nikkei, to drop 12% in one day. People were scared, so investors rushed to buy yen to quickly repay their loans. This meant they had to sell their global assets like stocks and cryptos, which led to a global market shock or crash. It's crazy that this is happening, guys. I didn't know much about this. You may have heard of this a few times before, but never to this extent. It sounds like they've been doing this for a long time, supporting all markets. That's interesting. Since the Bank of Japan changed its policy, Japanese government bond yields went up to levels not seen since the Bank of J. This caused fears of a wider sell-off. That means Japan has 260% of its GDP in debt. This must be the highest rate in the developed world, right? I believe twice or three times. Guys, that's 2 times as much as America's debt to GDP ratio, which is a very big red flag. Now, for the biggest one,